Hi guys, Joseph here from Intellect Finance. Welcome back. And if you're new to this channel, it's great having you join us. Today I'll be meeting up with Lebba from Blueprint Property, and we'll be discussing the process of purchasing a property from his perspective, plus what's currently happening in the real estate market. Welcome Lebba. Thanks for coming by. Have a seat.
Pleasure, mate. Thanks for having me.
The reason why I've asked you to come in was to talk about the procedure in people coming to you and purchasing a property, what they need to do. But before we go there, tell us about your business.
Okay, Joe. My office is located in Parramatta, but I service a large part of Sydney. I'd say, ultimately from the inner west out to, Glenmore Park, this Penrith area.
How long have you been in the game for?
I started my career in 1996. I graduated from uni and started working as a valuer for 3 years.
Oh, wow.
So I'm a licensed valuer as well. I worked for 2 years in commercial property management, sales and leasing in Parramatta, and then decided to go out on my own. So I started my business in 2001.
That's the year I got married. So you do both residential and commercial property?
I do, yes. When I first started, it was predominantly commercial, but now, we do both.
So you do purchases and you do leasing as well?
I do, yes.
Say you've got a new client. What's the procedure? What does the client need to do before purchasing a property and approaching you?
When a buyer comes to me, the first question we ask them is, do you have finance pre-approval? So that we make sure that they're not looking at properties that they can't afford.
Well, that's basically what we do. We get the pre-approval for them, so we know this is the maximum amount you can purchase price, and then they go to you, and you know exactly.
Because I've had buyers come in the past, and they like a property. We negotiate a price that both the buyer and the seller are happy with, but then after they go off and speak to their broker, they realise they can't afford it.
What's next?
We ask them whether they have a solicitor or a conveyancer that they work with.
Yeah.
So that once we've agreed on a price, we can forward a contract of sale to their solicitor or their conveyancer, for their solicitor or conveyancer to go through the contract, request amendments.
So before we get to there, so once they've agreed on a price, you expect them to pay. This is for residential, right? It's because you do both residential and commercial. But for residential, you expect them to pay a holding deposit to lock in that price?
Correct, yes, we do. So normally that'll secure the property for them for 5 or 10 business days, whatever's negotiated.
So in that 5 days, their solicitor or conveyancer will check the contract. The bank, we'll get a copy of the contract. We'll have a valuation done on the property, and then they can also get the building inspections done, and pest reports.
That's right.
Is there a difference between commercial and residential property?
Yes, there is. I mean, normally there's no cooling off period with commercial property. You negotiate a price. It's up to the buyer to act quickly because the property remains for sale until there's an unconditional exchange of contracts. So
they have to, for a commercial property, they've got to pay a deposit straight away, otherwise they miss out on the property. Correct.
So, it's rare that you get a buyer that's willing to put down the money and sign straight away. There's normally, at least 24, 48 hours of toing and froing between the two solicitors, requesting amendments, and then once they're happy with the form, the contract's in, they'll go ahead and...
So it's like an informal procedure where it's before they pay the deposit.
Correct.
A couple of days for check the contract. And back to residential properties. Okay, so 5-day cooling off period. The banks value the property. The valuation came in at the contract price. There's no issues. The solicitors checked the contract. Everything okay, and we've had the pest and building inspections done. What happens next?
So prior to the expiry of the cooling off period, the purchaser then needs to pay the balance of the 10% deposit. So the 10% less the 0.25 that they've already paid.
And then we've got it's usually a 42-day settlement.
Correct. Okay. So, and that's 42 days from the date of contract. So the 42 days includes the cooling off period.
Any tips for clients?
Yeah, look, a lot of buyers come and say, like a finding it hard to secure a property, and once we've ascertained that yes, they have pre-approval and they know what their limit is, there's a lot of tools on your phone these days with Domain and realestate.com apps where you can go in and you can save a search. So like if you're looking for houses in the Parramatta area, you've got $2 million to spend, you can save that search and then get notifications as soon as the property hits the market.
Can I jump in?
Sure.
I've got a lot of clients, they search on Domain and realestate.com and they say as soon as they go and inquire about the property, it's sold. Do you guys sell before you list sometimes, or?
What tends to happen, what a lot of agents do is they have a database, and before it goes to the open market, there's normally an email campaign that goes out to all the buyers on the database. And the same thing as what I just mentioned, where you have buyers on your database where they have their criteria pre-populated, so they're looking for a particular house in a particular area in a particular price point. If the house that you've just listed meets that criteria, they will get notified before that listing is uploaded to realestate.com and Domain.
So they're better off dealing with you directly, talking to you first before actually shopping around.
They're better off registering their interest with a number of agents in the area, so that they're on as many databases as possible.
Okay, auctions or sales? Okay. Tell us the difference between them.
I mean, an auction, you have a set auction date, so that on that day, or leading up to that day, you're going to have an intense marketing campaign, and on that day you are either going to have sold the property, or you're going to have very good feedback for your vendor as to what that property is worth. That's why normally where a property goes to auction, even if it doesn't sell at the auction, you'll find that in most cases it will sell shortly after, either on that day after negotiations, or maybe a few days or a week later.
For me personally, I don't like auctions. I don't like recommending them to my clients because they've got to pay a 10% deposit as soon as whereas if it's a sale, they've got that 5-day cooling off period, so the contract can get, I guess with an auction they can get the contract checked.
Correct. They get it reviewed, they can even get amendments agreed to prior to the auction.
But the only thing that worries me is I haven't got an unconditional approval from it. I can't get it because there's no price to value it on.
Yeah.
That's only my concern, but otherwise,
And generally I find most buyers would prefer to purchase a property, through private treaty negotiations rather than purchasing at auction.
At an auction, yeah. Another important question, how does my client go about making an offer? Say they see a property they like, residential or commercial, how do they go about making an offer? What do they do?
For a prospective purchaser at an open home or after viewing a property asks me for some recent sales that are comparable to that property we have for sale, by all means, I'm happy to give them that information. And I think you'll find most real estate agents these days, they are quite open to sharing sales evidence with prospective buyers.
And there's always a reserve, a price that it's got to, you got to fetch for the vendor as well. There's not, how much negotiation is there?
As an agent, your client is the vendor, and it's up to us to get the highest possible price for the vendor. And I know a lot of buyers don't like you saying that, or they don't like hearing that, but when it comes down to it, that's our job.
Well, that's what the market is. If there's a demand for a property, that's the price for it. It's just
correct. It's not ethical for a real estate agent to disclose what that selling price is going to be. Sure, you can give them a range, and then still negotiate the highest possible price within that range.
But for auctions, you do have a reserve price that it's got to sell for.
Correct, but most agents won't know the reserve price until the day of the auction.
Oh, okay.
So you can educate your vendor as to what you believe the property is worth. You can provide them with feedback from what prospective buyers have been saying to you throughout the open homes and private inspections. But ultimately, it's up to the vendor as to what they want to set that reserve price on auction day.
That's great. Thanks for sharing that with us, Lebba. Now, there is an emotional aspect of purchasing property. Can you share some of that with us?
Sure. Let's say a couple is purchasing a property for their family, and that, they have needs, and the house has to be a certain size. It's got to be, have a certain number of bedrooms, maybe close to a particular school that they want to get their kids in.
That's a key one, next to a school that the parents want the kids to go to. I notice those areas tend to sell pretty. Me personally, I couldn't get into that market. They were just selling. I mean, I'd go to an inspection and the property was sold.
Yeah.
I didn't even get a chance to inspect it.
And look, the advice I give a lot of buyers is that, if the house ticks all the boxes, it meets your requirements, and you do need to spend a little bit more than what you've budgeted, let's call it up to 5-10%. Generally, my advice is, if you can afford it, if you can get the finance to go up that extra 5-10%, my advice would be to do it, borrow the extra money, spend the extra money, secure the property, because if the goal is to stay in that house for 10 years plus,
The long term, yes.
long term, that extra 5-10% is really, in the scheme of things, is nothing, because in 10 years time, the property would have gone up a lot more than that extra 5-10% that they've spent.
And we've seen a lot of that in the last 10 years, where property prices have just gone up so much.
That's right.
Even paying an extra 50 grand, it's come back in a couple of $100,000.
That's right.
Yeah. Tell us about the market. What do you think? What's going to happen in the market?
Yeah, sure. Look, I think from late last year, firstly, a good indication of where the market is where's the auction clearance rate. From week to week, sure, it can fluctuate a few percent, but generally speaking, from late last year to now, it's softened, and it's generally sitting between 50 to 60%, which is quite low. But here in Sydney, we haven't seen prices go backwards. So there hasn't been a drop in values. Quite the opposite. We've seen each quarter there's been a couple of percentage points increase in property values. So the market is quite strong. I think people have been holding out. What we're seeing at open homes right at the moment is people are not in a hurry to purchase. They're out there looking, but unless a property ticks all the boxes and they can get it for the right price, they're not committing.
Do you think they're sitting back waiting for those interest rate drops?
No doubt, cost of living is affecting people, and therefore they want to make sure that even though they may have the green light to go out and get a loan for a certain amount, they are thinking long term, and they are thinking, okay, I don't want this purchase to affect my lifestyle or my family's lifestyle too much. So they are waiting for some interest rates cuts to come through, and they're talking about another one this month in May. Will that do it? I'm not sure. I think we may need another one before you see buyers starting to come back in the market.
Any tips of any good for the investors of good places where to actually invest in a property? Or
look, anywhere around infrastructure projects,
like the airport,
like
Western
Bradfield
Sydney
Airport. Yeah. Look, the northwest has been a real hotspot. In the hills, Kellyville, North Kellyville, Box Hill, the new metro station that's gone out to Rouse Hill and Tallawong. It's really opened up these areas.
What about, say, interstate? Any Queensland, Melbourne, Northern Territory?
To be honest,
Western
Joe,
Australia?
I don't know much about.
No, I've got actually a lot of clients that are purchasing in Western Australia.
Yeah.
Queensland, yes, but now it's more Western Australia. There's more.
Look, I find generally speaking that other states are more volatile, especially your mining states.
Yes, yeah.
Whereas Sure, Sydney, Melbourne, even Brisbane, you see fluctuations, but they're more steady.
Thank you very much for all the information, Lebba. That was very insightful.
My pleasure, Joe.
Thanks for coming in.
Thank you.
That was very interesting. I hope you got something out of it. I know I did. If you want to get in touch with Lebba, I will leave a link below in the descriptions for Blueprint Property along with Intellect Finance. That's the end of this video. Thank you for watching. I'll see you on the next one. See you guys.